Welcome back to Squawk on the Street. Rick Santelli here, live at CME HQ with breaking news. Our March read on Richmond Fed Manufacturing Index, expecting a number around 16. We improved 17, sequentially following 14. The best read of the year. You have to go to the end of last year to reach a higher number, which was 19. Now, for our February read on new home sales, and remember, it's all about jobs, jobs, jobs. And even though next quarter we're probably going to have pre-COVID growth levels, we're not going to be anywhere near it on jobs. And this number is a disappointment, 775,000, about 100,000 less than expectations, and sequentially follows 948,000. This is the weakest level since May. And, of course, there's a lot of moving parts here. Maybe affordability, commodity prices are all going to be key, along with the rise in interest rates. Stimulus checks, probably not so much. But for more detail on this number, of course, let's go to Diana Olick. Diana?
Well, Rick, you're right. You hit it square on the head with affordability. That's the problem here. Not only was the median price of a newly built home up 5.3% in February year over year, but remember, these numbers are based on signed contracts, people out shopping during the month of February, inking the deal. During the month of February, mortgage rates, the average on the 30-year fix, started the month at 2.79%, spiked up to the end by 3.28%. So you're talking of more than 50 basis point jump in the average on the 30-year fix, really cutting into that affordability. So that's a big part of this. Also, I would note, this is my favorite part of this particular report. It's the number of homes that were sold but haven't been started yet. It is significantly higher than a year ago, and that is because the builders are facing higher costs for land, labor, materials. They're seeing material shortages, and they are stalling on some of this construction because they don't want to build when prices for things like lumber are so high. So then you have the supply issue as well. Affordability and supply, huge disappointment. Could be part of that turning point we're seeing on affordability in both the new home market and existing homes. Morgan?
You just talked about that turning point, Diana. I'm curious, when you see higher costs, material costs, you see higher prices, higher rates, and record low amounts of inventory on the market right now. I mean, housing has been one of those strong pockets of the economy in the midst of this recovery right now. Could there be a larger turning point afoot when we do look at housing and the data you're seeing on a daily, weekly basis?
Well, I think you're already seeing, as you said, that turning point. But the problem is that the builders have really not been stepping up on the production. We saw housing starts very disappointing in February as well. There was some talk about it being weather related in the South, of course, and that could be a possibility. But you really need to see the builders put more holes in the ground, put up more houses in order to help that affordability. Because when you have so much demand, which has really not fallen off, and so little supply on both new and existing homes, then you just can't afford to buy it. You step back, you go into rentals. So unless we start to see a real ramp up in construction, I really think you're going to see housing cool off, even in this usually very busy spring season.
Shepard Smith here. Thanks for watching CNBC on YouTube.